I think we're continuing to look at a market where there's concerns around future growth and growth starting to abate a little bit versus rates coming off, and how do you balance your portfolios for that? And I think it's this sort of barbelled approach of in an anemic growth environment, you're still interested in growth stocks and you're looking for good quality growth names. At the same time, there's a little bit of defensive positioning. You're concerned about paying high multiples, so value starting to take interest at the same. And the UK is a particular focus there, starting to come into focus. You continue to see these bids coming in. You continue to see plenty of highlights about the UK market being relatively attractive from a valuation perspective against some of its peers. So that's the kind of conversations that we're having.
How attractive is the UK stock market at this point? Because there were reports around Coots putting money elsewhere. We know we're counting down to an election and the market's looking at potentially a change of government. How is the UK looking at this stage?
Well, I think there's a lot of positive signs in terms of the UK market. There is, when the energy crisis was upon us, I mean, the UK, I think, was at a slight disadvantage to some other economies, and rightly, I think people are pulling money out of it. We seem to be out of that now. Unlike some of the other markets, there's the consumer seems to be holding up a little bit better. I think the general consensus, if you get a Labour majority, is it's mildly positive for the UK, because there's nothing that we've seen that says that it's particularly anti-business. So I think that there's continued interest. The other thing there's a lot of focus on is this sort of continued outflows out the UK. That the UK pension fund allocations to the UK are down, from 50% to down to about 3%. You're coming to the bottom, effectively, of that selling. So there is a sign, but there is signs that might start to turn around. And then there's the whole capital markets reform agenda, which I think there's a lot of ambition there. Really, we just need to see that sort of come into action.
Oh, there's so much in there, Neil. I read it. I was reading the papers over the weekend, and I forget, it was either the Times or the Telegraph, one of the two. And there was a headline. I didn't get beyond the first paragraph. Then the headline said, "This retail stock could rally 125% from here." I saw "could" being the pivotal line. I don't know if you read the same article. I won't even go on about the stock. But the point is, there's a lot of that around at the moment. People telling me that so much in the UK is undervalued as well, for all those reasons you mentioned there. But is it undervalued versus European peers to such an extent that it makes it compelling?
I think so. I mean, we've certainly over the last month or so, we've seen more rotation sort of coming out of Europe into the UK, and there's a couple of reasons for that. I mean, firstly, the economic numbers in some of the European countries are not looking great. And then the second thing is, the geopolitical issues that are sort of stemming. So, France's election, which is the snap election that was called, etc., led to a little bit of flight of capital. So I think that the thing that people are sort of at the seed change, I think, is that it used to be one or two lone voices sort of calling out that the UK is undervalued. There's a real strong chorus within the investment community. And so eventually I think that's got to take hold. And it's the fact that trade buyers, professionals who are running businesses, who understand how these businesses should be valued, are coming in and buying up the business. And the Carlsberg move for Britvic is interesting, I think.
Yeah.